Hey everybody, it's Swaminathan. I got several emails on the Green Mountain trade, and they were a little confused how this trade is making money. Making money meaning how we are coming back to even. So I wanted to sort of just take an example. Let's take any stock. And basically, what we did on Green Mountain was we bought a straddle. So let's take the example of of the spider. And if we were to buy a straddle, we would buy it at the money. But before I go into the straddle, which is what we did on Green Mountain, I want to show you the concept of a calendar. So if we look at a calendar, and let's say we wanted to buy a calendar, what we would do is come here and we would buy the calendar. Now for calendars, it doesn't matter whether you do calls or puts. It's the same thing. So I'll show you that. So in a calendar, you're going to be paying a debit because the you're buying the later option. Instead of September, let's go to October. So we are selling the front month, whatever is front. Now front, it doesn't have to be the monthly, it can be the weekly. And then you're buying the back month. So if you look at the risk profile of a calendar, this is what it looks like. The principle of the calendar is that it's a theta positive trade. So basically you're going to get time decay because the front month is losing value much faster than the back month. And because we are short on the front month, we hope to gain that way. So now you can even add a put calendar. It doesn't matter. Calendars, basically you can go calls or puts, and it really doesn't matter. So let's do a put also. So now we have two calendars. I want to change this to October as well. So now if you look at it, it's the same graph. So whether you just put the calls or whether you just put the puts, it doesn't matter. So calendars basically will make money because the front month is decaying faster. So now let me take this off and let's do a straddle, because that's what we did for Green Mountain. I think we went to October, but let's see what the straddle is. Okay, so if we put a straddle, that's what that is. Now, if we sold the front month straddle, let's say front month meaning September. If we sold this, if we sell a straddle in the front month, and then you look at it, it's a calendar. So when you sell the front month straddle and buy the back month straddle, it becomes a calendar. So basically it's the same thing. So it's the theta decay. So now what we want to, instead of, now it doesn't have to be the month. So, we can go to the weeklies and do the same thing. So let me take off this monthly and go to the weeklies. And if you see the August weekly, which have 5 days to expiry, and you sell the straddle, and then you look at the risk profile, it's the same thing. It's a calendar. So that's exactly, now you can see the theta value is 128 because these weeklies only have 5 days left to expiry. So now if we come back to our GMCR position and you look at it, it's not technically a calendar, but it is a time spread. Basically, we are going to capitalize on the difference in time decay between the August and the October. So last week we capitalized about $1,300 on this, and this week we are hoping to capitalize another 13, 14, 15, but the opportunity is actually for 2.84 plus 1.45. Now for that, it has to expire between 75 and 77.5, and we won't be able to capture the entire amount, but whatever we can capture. If we can capture about $1,300 a week, you can see that within 3 weeks we are back to break even on this trade. So that's exactly what we are doing with the GMCR trade. So last week we did this. This week again we are doing this, and last week we did two things actually. We had a 80 77.5, and then the 80 call, the short call at 80 made $1,000. So we closed that, and then we converted it into a 77.5 short straddle, and that made $1,300. Now this week, again, we have an opportunity to make some money. And then, so you can see we'll be approaching closer to the zero line. If it expires anywhere between, I would say, 79 and about 73 or 72, we're going to make some money. So the whole goal is every week you try to take some profits, and and then you try to come to break even and perhaps even to a profit. Remember, our long straddle is in October, so we have a lot of time to do this kind of trade. So that's exactly how the GMCR trade is working out. Thanks.